Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and thank God 2020 is almost over. Really though, I gotta feel sorry for all the kids born this year, because from now on, they're gonna tell someone the year they were born, and it's just gonna be cringes and, oh, that sucks. But putting the year behind us also means getting ready for 2021 and how to invest. Over the next 2 months, we're going to be talking a lot about 2021 investing strategies, including what to invest in and how to be ready. But first, I wanted to do that higher level guide for you. Look at where the market is at, what I'm watching, and where I'm investing in 2021. If you're not part of the community yet, make sure you click that little red subscribe button so you don't miss any of those episodes or your opportunity for returns next year. Nation, it has been a crazy market this year. From crashing 35% to surging higher by 60%, the world's wealthiest have become $813 billion richer. But not everyone has been so lucky. A lot of investors panicked when stocks crashed and didn't benefit fully from that rebound. This is your second chance though, a chance to be ready to invest in 2021 and why I think it could be an even bigger opportunity. In this video, we'll start by looking at where the stock market is heading going into 2021. I'll then show you what to invest in now and how to be ready for anything next year. Stick around because towards the end of the video, I'm going to be revealing the step-by-step investing strategy that I'll be using. We're going to start with a stock market update, and I know this isn't as sexy as picking stocks or that how to invest strategy. But please watch through this part because understanding this big picture stuff is going to help you make those better decisions on how to invest when we do get to the strategy and then pick those individual stock picks over the next 2 months. Nation, the market is undeniably expensive. This is a chart of the market PE ratio, so the price investors are paying for total earnings reported by stocks in the S&P 500. And what you see in the green dashes here are the 5-year average PE ratio, and the blue dashes are the 10-year average. Now look at that line though. At the price of over 22 times expected earnings, the market is now 39% more expensive than that 10-year average. In fact, you have to go back to the tech bubble of 2001 to find a market more expensive than this. And to see how we got here, you only have to look at the returns by sector for this year. As earnings have gone down, so that bottom number in the PE ratio went down, we've seen prices for some of these sectors just explode higher. Consumer discretionary is up 21%. Tech stocks are up almost 30% this year. But not everything is as expensive, and that's going to guide a lot of our strategy going into 2021. Stocks in the energy space have plunged 51%, with financials and real estate both in the red as well. This is another great chart here, showing the PE ratios for each of the stock sectors, plus the market index, that S&P 500. Now the dark blue line is the current price of stocks in each sector against the earnings that analysts expect over the next year. For comparison, that green bar then is the 10-year average PE ratio for each stock sector. And I've added the percentages here showing just how expensive some of these sectors are on that PE basis. So on the one side, you've got stocks of consumer discretionary companies, tech stocks, and industrials that are hugely expensive and really driving this market. On the other side, though, you can still find some of those value in a few sectors like financials, energy, and healthcare that aren't trading quite as high off that 10-year average. So keep that in mind. And now let's take a look at what's really driving the stock market. And we're going to put it all together later for what I think could be the 3 best investments for 2021 and how I'm investing my own money. And it shouldn't come to much of a surprise that the 2 biggest drivers for stock prices right now, really into at least the first couple of months of 2021, are going to be that potential vaccine and the new stimulus out of Washington. We've got at least 3 companies well into their stage 3 trials for testing on a COVID vaccine. Moderna, Inovio, and Pfizer, with the latter already saying that it's going to apply for emergency approval somewhere around the end of November. And whether a vaccine gets us back to normal or how long it takes to distribute isn't really even relevant at this point. Just the approval of a vaccine is going to be a big sentiment boost for investors and the economy as a whole, and the market is baking that into prices already. The other market driver here is not just the $7 trillion plus pumped into the economy from the Federal Reserve and the government stimulus programs, but the assumption that we're going to get at least another multi-trillion-dollar stimulus, if not even 2 after that. And so the idea here is that if we do get more confidence from consumers that they can go out without getting sick, and if we do get another $1 trillion or so just pumped into the economy, that's going to mean an explosion in growth, and maybe these stock prices won't look quite as expensive as they are. But now we need to balance this with what the market is missing, and I think that longer-term reality of the virus and its effect on the economy. By most accounts, it's going to take at least a year to get enough people vaccinated to where we see that herd immunity and people can feel some kind of normal. Then you've just got the depth and the enduring weakness of the economy. Now, this graph shows the rebound in restaurant reservations in purple, and then the retail store traffic in orange. And while both have rebounded somewhat since May, they're still down significantly from last year. Restaurant reservations are still down 40% from last year, and retail store traffic is down to 10 to 20% heading into that critical holiday shopping season. And while unemployment has come down from the peak earlier this year, we're still seeing record highs every week from the number of people filing. Now, this chart from the Fed shows new unemployment claims each week, and even though the most recent week was lower than expected at about 787,000 new claims, that's still higher than at any other point in history. The peak for unemployment claims in 2009 was only 660,000 in 1 week. So while we do have those two forces, a potential vaccine and stimulus helping stocks move higher right now, I think it's a short ride, and it's a lot of what's going to drive the market in 2021. So let's put this all together for what I think could be the 3 best investments for next year, and then a strategy that I'm using to position in this market. For those of you following our 2021 Bowtie Nation portfolio on StockCard, you've already seen that we're positioning heavily in those value stocks, especially those in the energy, financials, and healthcare sector. Now, I'm doing that for a couple of reasons here. First is that if we do get back to anything close to normal, it's these sectors that are going to bounce back faster. Interest rates are going to rise, taking bank profits higher, oil prices should gradually move higher, and healthcare providers can finally get back to making money in something other than COVID-19. Also though, and this is key here, if the economy doesn't rebound as quickly as the market is expecting, then these value stocks don't have as far to fall. With tech stocks trading at 26 times on that PE basis, prices would have to fall by 66% just to make it back to that long-term average. By contrast, these stocks in the energy, healthcare, and financial spaces, they fall any and they're at that fair value, but even something like a 10% sell-off puts them in that deep value territory. So I'm going to be looking for those long-term investments in those 3 sectors, and I'll leave a link in the video description below if you want to follow our portfolio. As a bonus, I've negotiated a special 10% off on StockCard for everyone in the community. Use the promotion code BowtieNation, all one word and then the lowercase, and you'll get that discount above and beyond the 2-week free trial. Second here is that I'm using real estate as a hedge against any stock market weakness, but with a huge warning here. You cannot think of real estate as just one market. Now, this table shows the year-to-date returns by property type, and the difference here is just stunning. While the overall real estate market, those REITs that trade like stocks, while that's down 12% on average this year, some sectors have been absolutely crushed, while others are actually posting a positive return. For example, here you see a 30% loss on office property, and retail property is down 39% from the beginning of the year. Lodging and resort property is down an unbelievable 49%, with REITs in the space losing $22 billion in their market value. But a couple of these sectors are actually outperforming by a wider margin. Industrial property, so think things like warehouses and distribution centers, are up 9% this year. Self-storage is higher by almost 6%, and data center REITs are up a whopping 25% on the year. So I'm going to be positioning in REITs like Stag Industrial, which owns warehouses perfect for that e-commerce boom and pays a 4.4% dividend, or data center REITs like Digital Realty, ticker DLR, which has seen its stock price double in the last 5 years. Now last here, before we get to that specific investing strategy, is don't be afraid of cash. Now, I know it sucks to have your money sitting there in an investing account, not making any money on it, but I think we get an opportunity at lower prices earlier in the next year, and that cash is going to be your best opportunity. Now, that's going to be because traditional safety investments like bonds might not offer the kind of protection you would expect. With interest rates at historic lows, any bounce in rates higher is going to drive bond prices down, so you might be forced to sell at a loss just to raise that cash to invest in the lower stock prices. Cash, though, is going to be immediately investable, and with inflation around 1.5% annually, you're really not losing out on anything by waiting it out. So you've got that big picture of what the market looks like right now heading into next year and how I'm positioning. Now I want to share a more detailed strategy that I'm using for exactly how to invest. Again, I'll be doing a series of videos in specific stock picks and investments over the next couple of months, but this basic strategy is really how I'm going to approach it. Now, on that probability of a vaccine later in November and the potential for not just one more stimulus package, but maybe even another round, I'm bullish on stocks all the way through January. An emergency authorization for a vaccine is going to be a big sentiment boost, not only for investors, but just really for the real economy as well. I think you get a jump in retail store traffic, travel, and restaurant dining in those first couple of weeks afterwards. I'm more worried though as we head into the second quarter and then summer of next year, so maybe late February to May period. Even with more stimulus, it's likely that the longer term economic weakness really starts weighing on earnings, and just the reality of how bad that unemployment picture is just starts showing through into the stock market. For this then, I'll let my stocks run probably through January, moving into some of those value names, but also keeping my growth stocks in tech. And then as we head into February, I'm going to be using a combination of three positions. One is I'll take some profits from this year's stocks and keep a chunk of it in cash, just waiting for those lower stock prices. I'll also rebalance out of some of those growth stocks for a bigger percentage in the value, especially in the three sectors that we talked about: energy, financials, and healthcare. Now finally, for the stocks that I do keep, I'm going to be selling covered calls against them, covered call options, to collect that cash and hedge against a further drop in prices. Click on the video to the right for how I'm setting up our 2021 stock portfolio and the 5 stocks to start. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.